joining us as CEO and founder of Kobalt Labs. And we're going to get all into how we met, everything about Kobalt Labs, and the benefits that you provide, especially in the embedded banking space. So we met at Fintech Meetup, and one thing that struck me as I was there on the second or third day, chugging coffee just to stay awake, you were fresh and full of energy. And I don't know how you did this because I know you had umpteen many meetings and you had dinners and happy hours and all the things, but you were just out there making it happen. Is this some Fintech founder magic formula? Is this just you as a person? Have you always been just a go-getter?
Totally. I also had chugged some coffee before you saw me, so it was not without its kind of performance enhancements. But I think I've always just been very extroverted. And I think, honestly, the main thing is, I think it's fun, like to go to Fintech Meetup and meet all these people and talk about my company and talk about what everyone else is up to. I think I just find that stuff like energizing and not draining. And so that's what kind of lets me just keep on going.
Love it.
Could you just tell us a little bit about your background and like, why the heck would you want to be a startup founder? And
yeah, totally. Okay, so when I was in college, I studied computer science. I've always been interested in like a wide diversity of things. Like I was even a dance minor in college. So I was taking all these like theater and dance classes on the side. And I got my first job and I was working at various like fintechs. Like I was at Apple Pay as an engineer on their fraud team. And then I was early engineer and AI lead at this healthcare company. And I think I always felt like being an engineer was really fun, but it was like never enough. And I ultimately just got really bored. And I think the reason why I did is because I just love talking to people. And like I said, for me, I'm like, if I just sit in front of a desk and don't interact with people, I just get so tired by the end of the day. But is it the more times I can like be laughing with people and making connections, that's what I find the most fun. And that's what I think is actually one of my more unique strengths in terms of all the different roles that I have now. So yeah, I think I wanted to do something that was really exciting, that had me wearing a bunch of different hats, always talking to people, but still like doing a lot of engineering work and being able to like think about a technical vision. And that it all led me to this. The other piece of it is like I went to Stanford, and so I was definitely surrounded by like Silicon Valley entrepreneurship. So it was not seen as that risky of a path from my perspective because I had been exposed to all these people that had done it and made it work. So it felt a lot more accessible. And I just wanted to do something fun. Like I have very few responsibilities in life right now. I have no one to tell to not steal. So I might as well do something a little bit risky and see what I can do.
I love it. So two things pop up for me immediately. First of all, my day job, working with founders and helping them, very technical founders, have conversations and selling to banks. You seem perfectly suited to sell to banks. You're always out there, as you mentioned, selling, talking about your company. You're excited and crave that interaction. That is not something that everyone that has a technical background finds themselves founding a company that then finds themselves having to carry a mission and make sales of that company. It's probably something that is comfortable to them. Any tips for people? I realize I'm crossing the boundaries here, Steve, and asking something on the founder side, but
any tips? Totally. I think honestly, the biggest tip, and this is going to be such an annoying answer, but is just do it. I had never done sales before. I had never thought about building a business. I definitely did not know how to sell to a bank. And to some extent, that's something I'm still learning. But I think it was this idea that like if other people can do it, then there's a path to figuring it out. So I just dove in. A lot of it is talking to people who know what you're trying to learn and actually just like asking good questions. Like when we were first starting the company, I came from Fintech, so I didn't have a banking background. So I just talked to 200 bankers and I learned how to speak their language. I learned what they wanted. And now I can fit in and understand where they're coming from. So I think it's just about just getting in front of the right people, talking to people whose problems you want to solve, and not being afraid to just dive into the deep end and see if you can sink or swim.
I love it. Last thing I'll say about this, I promise on the founder side is we're sales side. The last thing I promise is simply that I hope you found that you don't have to be perfect at it. People crave authentic, people crave humility, people crave helping others find an answer. So your suggestion of finding like 200 bankers to speak to, bankers, they want to help. They truly do. So if you're already out there wanting to get into the space, or if you're a banker watching this wanting to learn about embedded, I know you're out there shaking your head. Steve, I mentioned there was a second question that I promise I'll let you ask the question, kind sir. But with your background, when you decided you wanted just Kobalt Labs, did you actually do the coding yourself or do you have a team of people? I've never asked you that question.
Oh, I have a CTO, and she's actually one of my good friends from college. She was actually at a firm, the I know Pay Later Fintech. So we both had these parallel backgrounds, but she's definitely the technical lead at the company since I'm always chatting with people and going to all these events. But yeah, she took the really big lead, and the two of us basically built our first MVP, just the two of us together. So yeah, that's the kind of power of having an engineering background is we didn't have to go get developers. Like we just designed and built it ourselves.
It's pretty fun. And she can never get by without them saying, I don't think we could do that. So they'll be like,
Yeah, exactly.
As innovative as you are.
Yeah, or even if I ask, is this something we can do? She's always, I'm the CTO. I'll find a way. Don't worry about that. So she's great.
I was going to pull your question on selling together and why you're going that route. We're all in sales at the end of the day. And especially for the bankers watching, whether you are the change agent that's bringing BaaS to your bank or you're the champion, like the decision maker that's bringing BaaS, you have to sell BaaS to your whole bank. The whole organization has to be 100% committed. And that's how you're going to be successful in this space. It's absolutely the right thing to do. You're selling a proven product that's a winner, but you do have to sell it and make sure that people understand it. And to Stacey's point, being authentic is absolutely the way to go about it. I also, can you help me? What is Kobalt Labs? Is it like mad scientists where you're mixing up chemical, making things explode? Or can you tell us a little bit about what it is you do?
Of course, the mad scientist stuff is all behind the scenes that you can't see happening in that room, actually. But Kobalt Labs at a high level is an AI-powered intelligence platform to automate a lot of the very, very painful manual and error-prone manual work that goes on in regulatory compliance for banks and fintechs. We work both with guys involved in BaaS and not involved in BaaS, but we have a huge footprint in embedded finance. And the reason why is because our platform can synchronize with basically any publicly available financial regulation and standard in the world in real time. So whether it's like a state level reg, a proposed rule, even a guidance or an enforcement action, like we just have it all. And so then if you imagine a BaaS bank, they're looking at a new fintech partner. They have 30 different policies and procedures. They have a huge stack of InfoSec documents, legal documents. Right now, that's a pretty daunting thing of sitting down and like churning through all of those, not knowing if you've missed something. But what you can do with Kobalt is actually ingest all of those documents. Say, I want you to compare all of this against these regulations in these states. Click Analyze, and Kobalt will actually let it rip for you. It'll say, okay, on page 357 of this fintech's AML policy, their SAR filing timeline has a deficiency here. Like they'll find all the little things that you might miss and point out areas that you should do a deeper dive on to just make sure that you can, number one, expedite reviews and not wait 10 months to bring a new partner on, but also have a really nice trail of very thorough analysis that will make regulators very happy.
I'm trying to just sit here and think through what that process looks like because bankers have to do this manually. And let's be honest, it's not good.
It's not pretty.
It's not a good situation. And it's tough if you put yourself in that banker's seat. The expectations, the sheer level of expectations that anyone listening is facing today, it's not that they want to miss anything. There are so many things flying at them from a regulatory standpoint where they have to just make certain are accurate and valid, that a tool like Kobalt Labs just is the answer. I would love to know, something that Steve and I talk about a lot is just where a name comes from. I don't know where the company come from.
Let's see. So yeah, I wish I had a very moving story for you, but we were naming the company. We were sitting in my room and we decided that we didn't want to take more than an hour to figure this out. Because if you want, you can take weeks and weeks of brainstorming. We're like, okay, we're going to cap this at an hour. At the end of the hour, we're going to have a name. So we were just spitting out all kinds of things. And out of the corner of my eye, I had a cobalt blue sweater on the edge of the room. And I was like, look at that. And there were a couple of reasons for it. Number one, we were looking for a name that had a little bit of emotional weight around it that makes you feel like something is reliable and strong. And like cobalt, even when you say the sound, it's like a hard consonant sound. It's like a metal. So it almost like philosophically aligned with what we were trying to create from a vibe perspective. And then it also, the .com domain was available, was honestly one of the biggest reasons why. And cobalt blue, selfishly, really suits Indian skin tones. So when we have merch, I'll be happy to wear it and publicize it.
Absolutely. These are all very valid, it's very strong points. So I want to thank you for that. Mr. Bishop, I have another question, unless you have a
I defer to you, Mrs. Bishop.
and
Always. Absolutely. 100%.
okay, that's okay. All right, then we're just gonna have Kalyani like just a daily call with her. So now,
The services are available.
thank you, thank you. I am interested because we are talking to traditional banker considering getting into the embedded banking space. And that's one of the spaces Grant you guys play in. And I want to be clear, you guys can help traditional banks whether or not they choose to go down this path of embedded. You can also help them when they get to the embedded decision and if they decide to move into that realm. But as you think about the latter scenario, banks that are in the embedded banking space, what do you see as the biggest compliance one in banks that are offering or embedded today? Any thoughts on that?
Yeah, that's a great question. It depends what stage they are in their maturity of their BaaS program, I would say. Because initially what we see a lot is this idea that should we be treating fintech partners as like our vendors or partners? Do our like existing policies and procedures even cover this like new thing we're encroaching in, which is something I'm sure you two talk with traditional FIs a lot about. And so where we come in there, even from Kobalt's perspective, is forget about fintech partners, run all of your own internal policies and procedures through and see where there are like really huge holes that are unique to embedded finance that you might have to fill. So that first piece of it is there's a big compliance gap, which is thinking that your existing TPRAM process, you can just drag and drop it. But there are broader themes to think about, especially from an AML perspective and like UDAP perspective that don't always happen with vendors. And then as programs grow, I think a really big compliance gap that people don't talk about very often is consistency. Like you throw all these bodies at the problem, you have some people reviewing this, you have some people reviewing this. If you switch them, they would have slightly different results. And I think a really big compliance gap is inconsistency of reviews, because that's when you think that you're checking all these boxes, but they're not actually being done properly. And so that's something else that we're trying to think hard about, which is how can you make sure that you have this process, but is it actually being applied across all of your programs equally?
I had never even thought about that. What if somebody is out of the bank that day? What if you do switch up roles? Or what if there are new hires? There are going to be individuals that come at these issues differently, and they may be running down the same checklist with different insights or perspectives and different my correlation. I hadn't considered that. Thank you for that.
Yeah, we talk to a lot of regulators too, and that's a big thing we hear from them, which is if there's a random like blip in behavior, you have to be able to explain why that was. And that's actually a pretty hard thing to answer.
Yeah, it makes perfect sense though. Like why it would be so difficult. Again, putting ourselves in a banker's seat, it's so understandable to just think through to why they would have these challenges, because it's hard to get your hands on this information for people that can frankly be a little intimidating to bankers when we talk in terms of regulators or examiners, and trying to make that happen manually. My heart goes out to them. So that's why there are amazing tools like labs out there to help you accomplish these needs. I feel like, Steve, were you about to say something? I'm trying to get caught in the view, but I'm still up top.
I'm happy to defer to you, as always, as I may have mentioned a time or two. And however you respond to that, I'm going to agree to it, just so we're all clear. As always, just reiterate that. If you're talking to a banker that's exploring, they're interested in BaaS, if they're on the fence, they're just now trying to understand BaaS. And what would be your advice on the best path to go? Like, how should they think about it? And probably from a compliance lens, I'm guessing, but I'll let you just run with that. And let's talk about a new banker that's exploring this.
Yeah, I think honestly, what I'm about to say probably applies to bankers that are trying to innovate from a technology or business perspective in any domain. But I think I see a lot of like paralysis, meaning we can't even think about this until we've researched it for 2 years and have every single little thing ironed out, which is why we see like bankers historically moving more slowly than they possibly need to be. Of course, we need to move with a lot of caution and take risk into account. But I think that sometimes there's this like extreme resistance to evolving, and it's because of this fear of what might go wrong. But I think, and this is something everybody always says, but you forget about the fear of not evolving either, right? And so I think for bankers that are thinking about getting involved in BaaS or even a different kind of business endeavor, the big thing that I always say, and I'm sure you guys also say, is like, you can start thinking about it, even if you need to know what do these acronyms mean or what are all these things we have to think about. There are people, you don't have to be like the single biggest expert, but you can talk to like consultants or rely on technology or both, or collaborate with other banks and understand how they manage their program. But there's actually a lot of resources that can help you like lean on other folks and start to think about it, because like time is money. So it just doesn't make sense anymore to wait, say, oh, we're going to look at this. I get banks that say, this is on our radar for 2027. And I'm just like, the world is going to be so different in 2027 that you just have to, like, that's not going to cut it anymore.
You're going the direction of, my next question was like, what do you think about the future? Let's talk about 2027, because I agree with you. I think embedded finance is the future of community banking, as I've said many times. But I spent 4 years trying to understand what it is, how to build a program and do it in a compliant manner. I don't think banks necessarily had that same like time frame, but the good news is that we can get them up to speed much quicker. They don't have to take the same time and do it. But when you look at it, what all are you seeing in 2027? Like agentic AI, the consolidation of files. There's all sorts of things that like play into this.
Totally. Let's see, even starting from the like compliance and risk perspective, which is what we're always thinking about. I think in 2027, if somebody is reviewing something by just sitting down, opening a document and reading it, and it's hundreds of pages long, I think that there's going to be a point where nobody's doing that anymore. Of course, you have to dig in and do your own review, but I think not having technology assist with like large scale work is going to feel like the most archaic thing in the world. And so definitely that's something we strongly believe, that like using technology to accelerate and strengthen a lot of these workflows is going to just be table stakes and not something that's even a question anymore. Hopefully it's even sooner than that. But of course, I know these things take time. And that's a big piece of it. I think I'm excited. I also agree that embedded finance, especially now more than ever, is like really well positioned to grow a lot. And I think in different domains. Like we also work with fintechs, and we work with a lot of fintechs in crypto that are finally feeling like this is their year to start getting out there and growing their business. And so I'm excited to see like all the new domains of fintech companies that even become available, because that's just going to make the whole market expand even more.
Yeah. So you're saying that not only is now the right time for more banks to come into the space because it's the future, but the supply of fintechs that can be partnered with those banks is growing as well.
Totally, because the cost of building technology is going down with AI. Like the reason why we were able to, make such a strong MVP very initially back in the day with a team of 2 people is because we had 6 more AI employees by our side, and that's only going to become easier and easier to do. And so then I think that there's going to be a lot of fintechs that are appealing to more and more niche audiences because you just can now, and all of them will need partners.
Yeah, that's amazing. You mentioned something earlier, and I'm going to pick up the baton from you. Talked about how you speak quite often with regulators.
Right.
Is there some sort of expectation or expectations evolving from these examiners relative to banks getting in embedded banking? I don't want to put words in your mouth. Tools that use AI versus more archaic review processes. Do you see examiners becoming very comfortable with that, or almost becoming an expectation? I don't believe the words in your mouth, but
Yeah,
right now.
totally. I think it goes back to my point. Starting from the technology side of using technology to aid all this work is going to be table stakes for regulators also. Like, they're not exempt from this, because when a regulator comes in and looks at a bank's program, they're looking at 10% of everything, and they're just extrapolating the other 90%. And has a lot of its own problems. They're also understaffed too, like everybody is. So we're probably, I think, the only RegTech tool that's pulled this off so far, but we actually have 2 state regulators that have started piloting Kobalt to review bank material, because they also, and some banks find it scary, some banks say, okay, but that means they're always afraid of what their regulator will say if they're using Kobalt. But I'm just like, they're using it too. So you don't have to be so afraid of trying new technology. So I think it's going to be table stakes for examiners, for banks. And then over time, as there's more and more data to prove that AI and technology raises the bar for like rigor and thoroughness of compliance, I just think that paper, like manual-based spreadsheet level compliance, is not really going to meet the bar anymore, especially as it relates to ongoing review.
Yeah.
I think a lot of people talk about this like idea of point in time reviews, like every X number of months. But with AI and even within Kobalt, we can see that fintechs can consistently continue to send more and more data to their banks that can just be continuously reviewed. So I think this idea of point in time review is also going to be seen as a pretty archaic thing.
That will shake up a lot of institutions, I think, and they consider the fact that this to be an ongoing type of an examination process. It struck me, Kalyani, as you were speaking there, that there is a lot of similarity to how bankers view AI. There's a lot of people that are extremely conservative, period, in the banking space, and view AI as this unknown or this thing to be feared. There's a lot of similarities to embedded banking as well, because trust me, if anything from the past, last week when I was visiting with Steve and some bankers at a couple of events, we found that the number of bankers that had actually heard of embedded banking or that were comfortable even discussing it probably mirrored many of the bankers' views on AI. I don't know, what would you think about that, Steve, meeting that? They both feel like they're so different, they're so out there, but they're really not. They're both so readily accepted these days.
In the Venn diagram, there's definitely overlap. I think from a banker's perspective, they understand that they need to change how they go about it. Their processes. They understand they need to change their strategy. So I think AI is one part of that. Embedded finance is another one. The problem is they don't know how to change their operations or how to change their strategy necessarily, because they don't understand the AI. They don't understand embedded finance. And I recently left a bank that was printing 1,000 pages per employee per month. So you talk about paper intensive, and banks that need to move forward with their tech and it's a juxtaposition of, had to throw that out there. Like, you're looking at a bank that knows they need to do something with technology. They need to be forward, but then they have these outdated processes because they're afraid to do it. So how do you get those processes? And now I'm rambling and going, I don't.
Is this the train of thought?
Oh, you're making.
Yeah. But no, I think it's the bankers, AI, it's an exciting time to be a part of it, and embedded finance, but it just reiterates how important it is to get the education on both pieces out there. You're not going to be able to live in a world where you can prop up your balance sheet at the end of a month, end of a quarter. For that point of time, the examiner is going to have real-time data and all of that. And what Kobalt is doing, that's really exciting to hear, the examiners, and they're actually using it. And so kudos to you.
Yeah, totally. I think the interesting Venn diagram with AI and embedded is one of the reasons why we started with BaaS banks as one of our earliest markets, because we were trying to, especially when we got our first bank, it's really hard to convince a bank to be your first user, as you might imagine. That was extremely difficult. Now, of course, we can point to this list and they feel more comfortably like the X bank that joined us. But that first one, the hardest part was figuring out who are the most future-facing banks that are open to hearing us out and seeing what we have. And we went straight to BaaS banks because it was a proxy. If a bank is open to embedded finance, it means that they are trying to think about economic longevity and continue to evolve, which means they're also more likely to be a really great early partner to Kobalt. So that's how it was this perfect synergy. We went straight for the BaaS banks because they were the most future-facing. And then we could slowly go to more of the TradFis that were dipping their toe in. So it was a really nice pattern that we saw. It was way easier to do business initially with BaaS banks because they weren't so afraid of everything. Not everything, but they were open to talking about their fears and actually taking steps to trying something new. I think the other piece of it is in trying to convince banks to be open to something new as a concept. I think a really tactical way of realistically doing that is understanding that there's different levels of risk with bringing on something new. If you think about AI, there's a lot of different places you can bring AI into a bank. And the highest risk one being AI controlling every single financial decision. The lower risk one being, honestly, what I think of as Kobalt, which is AI actually acting as a co-pilot and making sure the human work is being done faster and more efficiently, and also more high quality, but without actually completely replacing entire divisions. So there's bite-sized things you can do to start innovating without tearing everything down, which I think some people don't always realize.
I think that's true. And that realization just struck me as you were speaking here. For any banker out there thinking that a solution like Kobalt Labs is going to replace a chief compliance officer or a risk department or anything like that. It's absolutely not true. It's meant to enhance or ride as a co-pilot alongside these individuals that also need to have a human eye and human type of evaluation can help kind of just see a different picture. But I guess ultimately enhancing and augmenting the job and just helping to do it quicker, help you to do it more effectively. That is AI in the best use case, I think, for organizations. And no one nearing the end of time. I guess I find myself, and Steve, I'll give you a chance to ask a final question as well and hope it's a good one. But I'm just in here wondering, of all the positions at a bank, the one that I might desired to fill the least would be a chief compliance officer. There's a lot happening in that role. There's a lot of people involved, a lot of products involved, a lot of risk and exposure involved. And I find myself just wondering, do you have any advice for a chief compliance officer who's being asked to support an innovative mission? Maybe these are vast banks, worried about balancing out with the exposure. Piece of advice would you have to those individuals?
Yeah, it's definitely not an easy task and almost always a thankless task. But I think I can almost reframe it in a way that I hear from a lot of my most forward-thinking chief compliance officers that we work with, which is, again, of course, I'm pro technology by the nature of what I'm doing. But I think this idea of reframing it as not just this person whose job it is to say no to everything, but this person whose job it is to find very creative ways to say yes to things. You can become the hero of your organization in a way, not to put that one role on a pedestal, but imagine this thing that nobody knows how to pull off, but whether it's with technology or with other partners or with some other method, you find a way to go beyond the static box checking, but actually dynamically make your compliance program flexible to the future, but also have the same coverage you have. It's not an easy thing, but that's getting a business edge, right? And so I think it's it doesn't have to be this horrible thing that everybody hates. It can be this thing that lets you do the stuff that nobody has figured out how to pull off. Of course, that doesn't come without its risks, but it's risky to do nothing.
If you reframe them like that, maybe that is the job I want.
Yeah.
Sometimes I view compliance officers as a referee out on the field throwing the fun flag. You want to do something new and exciting, and they're like, stop holding, or we need to evaluate this. We need to take this back to headquarters and have them review the footage. Just trying to mitigate risk, but sometimes stopping the innovation. When you reframe it in that way, using technology to look for creative ways to say yes, where it's appropriate, where the appetite for that adventure exists for the bank in a compliant fashion, that makes it much more compelling. And that's whatever the use case, whether that is fast, is a more traditional FI looking to partner with a fintech, that feels better. So I take that back. I want to be a chief compliance officer now. It's tech out mind. Yeah.
And now Ambassador is down an employee. So thanks for that.
I'll get you next, Steve.
You see final question.
So I've got a two-part question for you. One's a statement and one's a question. If you have any questions for us, I want to give you that opportunity. So that's the first part. And then the second part is, what is the takeaway? People remembered one thing from our conversation over the past 30, 45 minutes or so. What would you think that would be? And if it's something I said, fine. Or Stacy, obviously, no. But no, what do you think is you want people to remember?
Yeah, great question. I have a question for you both, but I'll leave that next. But in terms of a nice takeaway of this conversation, I would say that, what would I say? I started talking without even having. Usually by the time I get to that point in the sentence, the answer has formed in my head. He's taken another second. I would honestly say that doing innovative things is inherently risky, but that's part of the job. And so the best thing you can do is go to resources and people that have pulled it off before or have the right guidance. Lean on technology that will help you prepare yourself for the future and actually prepare yourself for bringing in the right headcount and the right new tools and the right new responsibilities you might have. There's a lot of help at your disposal, and it's not the way it used to be where it's just you in this room figuring out how to get it done. So a lot of things that are very difficult, whether it's embedded finance or bringing in AI or starting a fintech company, or nobody has it all figured out. So you might as well dive in and start checking it out anyways.
Yeah. So if I was to sum that up,
Sorry, I know that was long.
No, I thought like the only thing riskier than innovating is not innovating.
Yeah, exactly. So you just might as well. And you don't have to have it all figured out initially, but you should at least start thinking about it now so that when you're ready to, you'll be well positioned. And then the question I have for you both because I'm usually talking to folks and having to convince them or assuage a lot of their fears. But my question for you is for the banks that end up clicking in that embedded is going to be a way for like economic longevity for the bank in the future. What's the biggest reason why a bank like would start with embedded finance or bring a new technology? Like, what do you see as the driver that actually makes people change their behavior?
Do you want to start, Steve? I have an idea, Rose.
I'm good either way. I will defer to whichever you prefer, man.
I was going to offer this. I had a conversation, and I believe I put a LinkedIn post out there about this, but it has stuck with me since it happened. I had a conversation last week with a banker I have known for decades at this point. And we were talking about embedded banking and with the different value propositions that are available and afforded to banks that at least want to consider it. And every bank I spoke with last week was looking to grow deposits. That was the number one value proposition. Just so happens embedded banking does that quite well for a bank that chooses to pursue a model their program in that fashion. So the thing that remains with me from this conversation with the banker is that he mentioned they have a new digital officer at the bank. And the new digital officer believes that what they need to grow deposits is a deposit account, like an online acquisition tool, or a DAO package, an origination package where you go onto their website, I can open an account, and then the money is just going to flow in. And his comment was so spot on, where he said, I don't believe that this is going to be a differentiator. We are not new to the game here. There are so many other banks and credit unions doing this already. I don't think that there is any customer in our state or a different state that's been waiting around, twiddling their thumbs, waiting for our bank to offer account origination online so that they can send us all of their deposit money. And he said, we need a different tactic. We need a different way. And I thought, oh my goodness, that encapsulates so perfectly. Slap in the face moment where a traditional banker needs to understand that the way in which they're playing the game has probably already been played by so many other players. There's 9,700 other players on the same field trying to compete in the same way, playing the same game. So why not do something differently? And that's exactly the reason why he came and spoke with us. That's exactly the reason why he's already registered, he and some folks from his bank, for an upcoming webinar we have in May, because he is interested in looking differently, moving to a different field, playing a different game. So I hope my soapbox passion infused answer provides you with a little bit of insight about my take on that. Steve, to you?
Yeah, I think, there's so many things that I could say that it goes back to the innovate, feeling risky, innovate, not, and planning on everything staying the same. The world is rapidly changing. Banks have to find a way to take their product to where the customer is. It's so important, and that's going to change. So for banks to survive, they can't sit and wait for customers to walk into the branch. They're going to have to find the way, and embedded finance is that way. You have to be all in. You have to have that eye on economic longevity, which is a great way of thinking about it. Your long-term strategy, you can't focus on being in the black day one in any business, but that doesn't mean there's a long time in the red. You can do it in a compliant manner, get up to speed. But not only are you adding that line of business, you're adding the competency that you can be in a tech environment, and you can change as the world changes. So banks need to recognize that you're not going to be able to have the traditional community brick and mortar layout. You need to find a niche strategy. And I think that probably the biggest niche, which I realize that those words are opposite, but the biggest niche is going to be embedded finance, because there are so many fintechs and ways you can go about it, and you can find nuances and niches within that space.
And they don't have to be mutually exclusive either, Steve. You can still be a traditional bank and be comfortable and compete on the same playing field with 9,700 of your closest friends. And you can have, as you refer to, the biggest niche, which is funny when you say it like that, because it's definitely counterintuitive. But you can have that niche that you go after. And if it's not embedded banking, it can be something else, but I don't think it can continue to be the same old thing, rolling out the same types of technology and solutions that every other FI is doing in the US.
Yeah, very well said. And can I just say, just a fun
Please.
update, I just got a text from my co-founder. One of the more well-known bass players, another one of them, just 1 second ago, officially signed to use Kobalt to do all their Fintech.
Congratulations.
So it happened this morning.
Kalyani, if we have not scared you off, this is not going to be the last time the bishops are going to ask to have some expertise and have you join us. Love to have you come back for another interview and even a webinar. I realize I'm springing this on you all of a sudden, but a webinar with some banks and maybe
Let's do it.
tech players that are
Yeah,
gentle in this space.
totally. Yeah, our technology was initially built for like the existing programs to scale efficiently, but we're releasing some tools for banks to even get started with BaaS and get their program in place so that they can get their first fintech partner. So yeah, lots to come for us to overlap on.
This idea, there's a lot of players that we have that are just interested in getting into the space. Stay close and we'll ensure that you hear more from Kalyani and Kobalt Labs. I know there'll be many more successes that we can celebrate together moving forward. And with that, Kalyani, thank you for, again,
Thank you.
Is this so lush?
Bishops and providing us with your thought leadership and expertise. Thanks for watching out there, and we will talk to you all next time.
Thank you so much.